women's portfolio have done 1.5-2% returns more than the men portfolio because their investment stays steady for long number of years. When there is a war, when there are elections, when there are uncertainties in the economy, most of the time, most of the men take decisions on those actionables. Money and emotions are so interconnected because money is emotions, emotions is money. And I think everything revolves around that comfort that I have enough to live. And so it's very essential saying that we look at money in a different angle and with a different emotions, and especially women are very, very emotional by nature, and traditionally that is how we are brought. There is an innate ability within us where we are very contented. Most of them are contented, patients, want financial security for themselves, for their family, for their children. They basically are they don't get so much hyper. Like what I have observed is saying that when there is a war, when there are elections, when there are uncertainties in the economy, most of the time most of the men take decisions on those actionables, like, oh, there's going to be a war, let me take out money, keep it aside. Oh, there's going to be an election, we don't know what will be the election results, so we don't know how the economy is going to work, how the markets are going to react. So most of the men come to because of information sharing and because of the way that money has been handled. Whereas what we have experienced and observed is women, if they know saying that I have enough income coming in to run my home, I have enough income saying that in contingency to fall back on certain corpus of wealth, they are very contented to understand and say that, okay, I have got regular income, I have got corpus for myself in case of emergency. The invested money is left to compound over the next 10, 15, 20 years. And that's why we observe in our own office that women's portfolio have done more 1.5-2% returns more than the men portfolio because their investment stays steady for long number of years, vis-a-vis men where they, the money is taken out because of risk, because of markets, because of elections, because of even in case of COVID, a lot of people took out the money because of uncertainty. So most important to understand is, as women, you are very, very well contented. You're very patient to see through that ups and downs because you have innate resilience to face challenges, to face difficult situations, and that is what every woman has it within them. I don't know where it comes from, but it is there within, and that's what, if you look around, and if you look around in your families, if you look around in homes, if you look around in your society, that's what we observe. When it comes to investment, as I said, people traditionally, women go for fixed deposits and gold. I would also request women also to look at equities, because equity is the only asset class which will create wealth above inflation to sustain your lifestyle over a long period of time. So when we talk about investments, we definitely want, today's times, even a senior citizen plus should have 10, 20, 30% of the wealth in equities through mutual funds, through or direct stocks that you can buy. But don't get into trading, don't get into any of those hearsay kind of investment, because at the end of it, it's your money. You need to, at that age, the most important thing is to preserve capital. So the more you have to take proper guidance, and the whole dynamics of investment strategy in the last 20 years has changed so beautifully that you have equity mutual funds and you have there are 44 to 45 fund houses today. It is the most regulated industry, mutual fund industry, the way it is being managed, the transparency of your portfolio. It is an investment which gives equality to the rich and the poor. It gives you the exposure to the best 6 or 7 fund managers. Underneath them, there are hundreds research analysts who take care of your investment. You have different market capital products which are there, market cap allocations that you can do between large cap, mid cap, small cap. You can also get into multi asset kind of investments which spreads into gold, oil, debt funds and all of those instruments, so that your portfolio is absolutely diversified and you have investments in every basket. There are instruments which is called equity, and you also have debt funds. Now debt funds are basically saying that product which is like fixed deposit but different than little fixed deposit, because underneath that you will have government security bonds, or you could have the underneath corporate bonds which are there, then you will have treasury bills. So you have different kinds of debt funds. Once you sit with your financial consultant or a distributor, mutual fund distributor or an advisor, they will guide you with required to your asset allocation, your goals and aspirations, and these all investments can be looked at. I have also seen saying that lot of senior citizens spread their fixed deposit into some 10-15 banks, with the only thing saying that I have a security of 1 lakh or 5 lakh rupees of fixed deposits, and that is why I should invest into 5-7 banks so my money is safe. Yes, that was what traditionally, but if you look at the last 20 years, I don't see any scheduled bank which is under the RBI radar where any investor has lost any money in any fixed deposits. No one has lost money in fixed deposits. The only people who have lost money in fixed deposits have been in cooperative banks, because cooperative banks don't come under the radar of fixed deposits. And why do people go to cooperative banks? Is because you get a little more interest rate. So before you allocate, please understand the risk and the reward, and then you start allocating money. But please be assured saying that I think in the last 20 years, there have been no nationalized bank or a scheduled bank where, a private sector bank or a nationalized bank where anyone has lost money. The RBI is already ensured saying that the banks get merged with a stronger bank and your money is not that your money is at risk. So please be assured, I think history teaches us a lot of things, and there are regulatory aspects, the regulations, the way things are happening. I think we are in a way in a very different environment, but definitely seek guidance and go to an expert and seek guidance. Thank you.